What's going on, team? And welcome back to the channel. Now, I posted on Twitter a few days ago that I would be doing my take on the CRT, candle range theory, whatever you want to call it, a concept popularized by Romeo, I guess. In my opinion, it's just a repackaged concept that already exists, but something I will use every now and then in my analysis as confluence. It's not as complicated as they make it seem, at least not in my opinion. They may have a totally different view on this than I do. But in this video, I'm going to give you my view on the CRT. Now, all we're looking for with the CRT is to use higher time frame candles as our trading range. So if we look at my screen right now, we can see that we have the 3 a.m. candle opening here, which is nice because we obviously do not just want to use any higher time frame candle. We want it to be within some sort of macro hour. Now, 3 to 5 is the London kill zone, so that's completely fine. So we have the 3 a.m. candle here. I'm going to mark out the low of that candle, and I'm going to mark out the high of that candle. The low of the candle is going to be the low of our trading range. The high of the candle is going to be the high of our trading range. Now, all we're looking for is a sweep below the low here or a sweep above the high here. Obviously, we want to combine it with a little bit more confluence, something that I like to do. I'm a turtle soup trader, and this is what I have done majority of the time when I place trades, is I look for a Fibonacci gap, and I look for a low inside of the gap that failed to fill the entire imbalance, right? So by looking at this gap here, we can see exactly that. We form a low inside of the imbalance. That low fails to fill the entire imbalance. Now I'm expecting the new low to sweep prior low, fill the entire imbalance, and go higher. When that is combined with an hourly low or a higher time frame low, that's even better. As you can see, this candle here is the 3 a.m. candle opening. That means this right here is an hourly candle low, aka our CRT low. So something that I would be very interested in taking. Now I'm gonna put my entry at the low here. I'm gonna keep a tight stop, and I'm gonna target the previous range high, right? And we know that this is our range high by looking at the hourly candle. This is the 3 a.m. candle high, aka our CRT high, and our CRT low, which we're now gonna turtle soup. So let's play it out here. And as you can see, we come down, sweep the prior low, fill the entire imbalance, and then go higher. That's combined with that CRT theory of this being the hourly candle low and this being the hourly candle high. And as you can see, price ran to the hourly candle low, swept the low, ran to the hourly candle high, swept the high, and then ran lower. That's essentially how I will utilize the higher time frame candles as my trading range. Now, it can, in my opinion, just be a regular power of 3, because often what you will see with this CRT strategy is that the low and the high of an hourly candle is simply just the low and the high of the accumulation stage of a power of 3. Now, obviously, we didn't have a proper consolidation here, but what you will often see with this concept is that price does this, forms an accumulation, and then has a move lower, sweep the hourly candle low, and then sweep the hourly candle high. And that's essentially the CRT. So in my personal opinion, all the CRT really is a repackaged power of 3 with a fancy name. Now right here, we're going to use a 15-minute candle as our CRT, right? We are inside a larger imbalance here, right? We have just formed sort of an indecisive candle or a less aggressive candle. So I'm going to go ahead and use this as my CRT. Obviously, it has to overlap or align with my higher time frame drawn liquidity. So this has to be in a spot where I still think price will go higher. That combined with this low resistance liquidity that we're starting to build up here tells me that, okay, we're probably going to go a little bit higher here. So if I now go to a 2-minute time frame, I'd be able to see that we have the CRT high here, CRT low here. Now let's see what price does. Comes down, and I'm ready to turtle soup this low. I'm going to include this low in my stop, and we could possibly target these equal highs here and use this as our break even. Now let's see exactly what price does. It comes down, sweeps the 15-minute candle low, the prior 15-minute candle low, right? Sweeps that and goes higher. Okay, now all that's missing here for me is some sort of imbalance here, right? Because this is a bit too random of a turtle soup in my personal opinion. But again, it is that CRT theory. We have a 15-minute candle that acts as our trading range. We sweep the low of the range. We can expect it to go to the high of the range. If we go to 15-minute chart, this is what it looks like. New 15-minute candle opens, rallies down, sweeps prior 15-minute candle low, and then goes higher to take out the range high. Now let's use the same analogy on this variant candle here. Of course, I want to see bullish price action. So on a 2-minute time frame, I would want us to sweep the 15-minute low. And as you can see, this low actually overlaps with a gap that failed to fill the entire imbalance, just like the previous example. I'm going to use a stop like this, and I'm going to target this high up here, and we'll see how it plays out. As you can see, it ended up working out, but something that was a little bit lower probability about this is that we swept the range high before sweeping the range low. So if I want to go long off of a CRT, or a higher time frame candle low, I would want the higher time frame candle high to still be open, right? Because I want the low swept of the higher time frame candle as manipulation. And if we sweep the high first, then the high sweep was likely the manipulation that I was looking for. But again, as you can see, like had we taken it short, this is the CRT high, this is the CRT low, right? We come up, sweep CRT high, and go straight to the CRT low just to go higher again. So a short would have worked here and a long would have worked here. Now let's just continue to use this as we go along here. We have another 15-minute candle here, right? Low, high. Let me go to a 2-minute time frame. This is the low of the range. This is the high of the range. I'm still expecting higher prices as of this moment. We have a fair value gap right here that we have not filled entirely yet. So I have a gap that supports the CRT low. I'm going to place my entry there, and I'm going to target the swing high, the previous swing high, or the CRT high. Obviously, that's the 15-minute candle high, 15-minute candle low. If we sweep the low, my target is the high. So we're going to go ahead and play it out here. So as you can see, we actually came up and swept the high of the range first. Now we're probably going to come down, sweep the low if the analogy is right. Let's see. We did indeed, and let's see what happens then. We indeed went to TP. So again, a short would have worked and a long would have worked, right? All because we looked at the 15-minute candles as a range instead of just a regular old candle. So price moves from CRT high, CRT low, back to CRT high, depending on the drawn liquidity. So now I'm going to go ahead and use it on a 4-hour candle. I'm going to mark this out as CRT low, and I'm going to mark this out as CRT high, expecting that to be our trading range. Now we go to a 2-minute time frame and we wait for the range low, which is here, or the range high, which is here, to be swept. Now let's have a look. As you can see, we immediately sweep the high, so we would have gotten short here. Let's put our stop there and target the range low. And as you can see, it worked out perfectly. Obviously not as clean of a turtle soup because we did get multiple candle closures above, but that is expected when using a 4-hour time frame candle as your range, simply because on a 4-hour chart, obviously it was still a beautiful soup, but on a lower time frame, you can get a couple candle closures above, still validating the turtle soup. But again, the most important part here is that you understand that it moves from CRT high to CRT low, or the opposite, depending on the drawn liquidity. Now, again, I'm trying to make this simple, although I don't really see how this could get any more complicated, right? You want to use a higher time frame candle as your trading range. You want to buy the low or sell the high of that trading range. You want the high or low to be overlapping with some sort of imbalance or just any PD array. And then you want to target the opposite high or low. And then that is basically how I personally use candles as my ranges. Now, this often works because it's the high of the accumulation of a power of 3 and the low of the accumulation of a power of 3. And then once you sweep the high, for example, that's manipulation. And then we get distribution to the low. It really doesn't get any more simple than that. I use it as a confluence, not as entry criteria. Just like I showed you in the previous example, if it's a setup that I'm looking to take and it just so happens to be the low of a higher time frame candle, that's nice, right? It's an extra confluence, but it's not something that's going to make me, not take the trade or take the trade. Just something that I use for an extra confluence. And that's my take on it. You can go ahead and watch Romeo's video on it, or, do whatever you need to do. Simply, this is all that I look for. I personally think that one big problem with the ICT community is that everyone tries to overcomplicate everything. It's almost like people make it harder than it needs to be, trying to package these things into way more complicated concepts than they really need to be, all because of some enigma, or some people think there's a big secret to trading that they just need to figure out. When in my opinion, it really does not need to be complicated at all. Don't focus on an enigma. There's no secret sauce. Just trade what you see, okay? All the people trying to tell you this and that, it's a great marketing scheme for these people, because obviously if it's mysterious, then people want to buy it automatically because, oh, maybe this is the secret sauce. Maybe this is the key that I've been missing. But no, it's not. I hope you enjoyed my little version of the CRT or the candle range theory, whatever it's called. I'm not too sure, but decent concept once you figure it out. And no hate to Romeo or any of the other turtle soup traders. They probably do different than me. I simply just gave you my take on it. This is exactly what works for me, and I use it as a nice confluence. So thank you so much for watching, and I will see you in the next video.